All right. So I've listened to your question. Look look at this chart clearly. Look at it very well. The first things first. I need to know if it is if the major trend is an uptrend. You understand? You cannot be trading breakouts opposite the trend. Make sure you are following the trend because I'm seeing something that look like a bearish flag here. Okay, you can see after the breakout of the bearish flag, you will see that the market continues in the direction of its trend. You understand? So look at this chart clearly. I just took a screenshot of your video. You can see that it's not clear. The video is not really that clear, and the screenshot will also not be clear. So um, if you look at the chart carefully, you'll see that the market goes up. Thank God you are the one that drew this channel yourself. So even though it's not advisable to draw charts like this sometimes, but so you can see you drew this channel by yourself, right? So you assume the market goes up like this and then breakout. So you have to trade this breakout. All right. There is a resistance level here and the market is going up. There's a level of resistance here. You can see there's a resistance level here and the market is going up. So the market may use this area of resistance, this area, to continue in its uptrend because it is going up. Okay, because the market is going up. So this is the channel. Look at your chart, and then the market is going moving like this. Okay, so at this particular area, this level you are entering is not ideal because it can use there to continue to move higher. It can use there as a support. Remember, when the level of resistance gets broken, it works as a support. So the proper thing to do here is to go with the bias in the direction of the trend. Okay, even though this is a short time frame, like this is a 1 minute time frame, that is the reason why the chart is closing quickly, because you selected 1 minute. Okay, so the overall trend is up. This is a bullish flag. After breakout of the flag, the market pushes upward directly because that is the direction of the trend. Okay, this is a bullish flag. Okay, after which we saw a breakout, right? Okay, the best thing to do here is, if you look at this chart clearly, you will see there is a resistance here. So after the breakout of the bullish flag, you can see there is a resistance level there. This is a level of resistance. Okay, so after breakout, after the market broke this level, you can see it used there as support and continue its uptrend. Okay, now there is another level here. The market broke this particular level. You can see the breakout. Now these sellers have hit this support level again. It will go up. So if you are trading breakouts, you are going to, anything you are doing, make sure you are going in the direction of the trend, not against the major trend. Okay, not against the major trend. So you are going to trade higher breakout, that is bullish breakouts. If you see a breakout in the upside, you go with the bias. If you get a support level, if you get a resistance level that has been broken, allow for it to get to that level of support, then move with the, use it as a support level to go with the buyers. Okay, because the market has already showed you its direction by forming this bullish flag here. You can see it broke and then started to go up like that. Okay, so you cannot say because this is a breakout of this channel, you will now go with the sellers. Yes, the market may reverse, but the ideal thing to do here is to go with the buyers. Okay, it may reverse to this level. It can reverse from anywhere. It may reverse to this level and push. It may reverse to this level and here. So the market can take reversal from any of these levels. The market can reverse from any of these levels, from here, from here, from here, from here, from here, or maybe here. Okay, but the ideal thing is just to go with the buyers, not with the sellers. And the candlestick is closing early because of your time frame. And there is something I noticed on your chart again. I think you are having a TP, which is take profit of just 30%, and you are putting your stop loss at 50%. That's not what I taught you now. Eh? That's not what I taught you. How can you be risking more to gain less? You don't risk more to gain less. You cannot risk 50% of your capital just to gain 30%. It doesn't work like that. Okay. So I'll open that your chart and see and explain to you again. So the best thing, you select the time frame. The candlestick is on a 1 minute time frame. So that is why you are seeing early closures. Each candlestick represents one particular time frame. So it is already on 1 minute. So that is why you are seeing the candle closing early. So let's see, let me look at this your chart again. Okay. So if you look at this chart now, I'm coming, let me see. If you look at this chart now, you see that the time frame is on 1 minute. You can see. I've told you already that you select the time frame that you want, okay, by changing it to, let me see, 1 hour. You can see this is the 1 hour chart. Okay, it means every candlestick here represents 1 hour. Okay, so if you're opening this, if you open any position here, each candle is going to last for 1 hour. So your take profit and your stop loss, you put your stop loss at minus 50%, and then you have a take profit of 30%. Your stop loss is higher than your take profit. So let's say you have $100 in your account. Okay, like now you have $97 in this account. Okay, your take profit, your stop loss is 50%, and you're opening the trade with a volume of 35,000. Look at the trade volume, 35,000, because of your leverage. Because of the leverage is 5,000x. That is 5,000 times your capital, your investment capital of $7. 7 times 5 is what is going to give you 35. So you have a leverage of 5,000 times 7. That is going to give you 35,000 in volume. Okay, your leverage is 5,000 times your investment capital of $7, which is going to give you 35,000 as your trade volume. Okay, now if you are investing $7 for this trade, and you have a stop loss of 50%. It means that once you have once your balance is minus 3.5 dollars, the trade will close because of the high leverage. Okay, because of the leverage you are using, the trade will close automatically, except if it is going in your favor. And if it goes in your favor, you hit a capital of just 30%. What is 30% of 7? 30% of 7 should be, if 30% of 10 is 3 to 1.5 or something. I think around approximately 1.2 or 1.3 dollars. Okay, so let me say you hit the buy button now. I just did that. Okay, so you can see minus 3.58. The trade has closed because of your stop loss. Your stop loss is 50%. I opened a position of $7 at 3.58%, which is 50% of $7. It has closed. If it is going in your direction, if you are hitting once you hit a profit of what was it called, 30% that you set it's going to close. Now I open a position in favor of sellers. Okay, so if you have a plus 30% interest, automatically it is going to close. The first one was an uptrend, and then we had a minus 3.5%, which is half of 7. Okay, now you can see position close automatically by auto close, minus 3.58%. Okay, so now what are you supposed to do? What you are supposed to do now is you are going to reduce your leverage. Okay, it's either you reduce your leverage or you reduce your stop loss. Okay, you can put your stop loss at, since you are investing $7, you can put your stop loss at 100%. Okay, you can put your stop loss at 100%, reduce your leverage to, let's say, what pair is this? USD JPY. Okay, for USD JPY you can leave that leverage of 5,000, no problem. That is the highest leverage they can give you in this account. Okay, and then change the candlestick. Most importantly, change it to a higher time frame. Maybe let's say 30 minutes, or let's say 15 minutes. 15 minutes candle, let me see. Okay, let me look at 1 hour. Okay, so you can see for 1 hour, you can see that the buyers are entering the market aggressively. Okay, you can see that the buyers are entering aggressively. Okay, this was, let me switch it to 1 minute. Let me see your previous setup. Look at your setup. Look at the setup you did here. Okay, you see what I just explained earlier? You see, let me show you. So like I told you earlier, I told you that the market may gain support from this. So the best thing to do is to go with the buyers. You can see that the market goes up after that, hitting that level. You can see what I explained from the screenshot of the video you sent. You can see. Then it's started to push down from this high here. So look at the time it took. Look at this candle, this bullish move alone. is enough to take you out of the market. Okay, so that is that. So what you are going to do now, you can see now that the market is in downtrend. Okay, on this 1 minute candlestick. Okay, so but at this time the market is the direction has changed to uptrend. Okay, so you just change it to maybe at least 15 minutes. You don't open your trade for what was it called, on 1 minute. The highest you can do is, let's say, 5 minutes. And if you are trading fundamentals, okay, if you are trading fundamentals, you can do 5 minutes. That's if you are waiting for any big news events in the market. Okay, so now let's say okay, the candle is moving so fast. This is 5 minutes candlestick. Today is Thursday. Tuesday. Oh, okay, no, today is Wednesday. Today is Wednesday. Okay. So the volume is very very good at this time. So this is 9:01 a.m. You can check the trading session. I think we have still not entered the cross of London and New York session yet. So I open a position for sale. Now let me edit. Now you can take profit when it is, look at your setup here, 2%. Okay. Now you can see. You can see. Once the profit hits this plus 2%, you are automatically closed because you set it like that. Automatically the chart is closed. So you can see that once I hit a profit of just 2% of my capital, which is $2.1, $2.01, you can see that the trade closed automatically. Okay. Then you can go to your stop loss and set it at 100%. Since you are not using, and you are not going to use your balance to keep the position. Look at this place where it is written. Look at this place where it is written, use balance to keep position open. Look at this small box here. Use balance to keep position open. This small box. Don't ever tick it. Don't ever use your balance to keep position open. Make sure you are only using your invested amount. So that means if you run out of this $7 investment capital, that is when you will get a margin call. That's when you will get a margin call. Or that is when the trade will close automatically. Okay. So you can increase, you can say, you can put you can increase your profit. Say when profit is at 50%. Okay. When your profit is at 50%. So now stop loss is close to the current price and allowed. Okay. Okay, so you can see, so you can see it clearly, right? I'm taking this trace right in your on your screen, so you can see what is going on. So once you are the one that is going to set how much do you intend to hold the position, okay, using your invested amount, using your investment amount, okay. So let me edit it again. When profit is at plus 100%, okay. So if I make 100% of this investment, the trade is going to close automatically, okay. So you can see I am on plus 28%. You can, as you know, the market is fluctuating. So I'm already with a profit of $2.69. You can see the trade is running, and then you can set your stop loss. The stop loss is not set, okay, by clicking this edit button. You can see there are two buttons here. See, I'm already up with $5. You can see the close button if you want to close the trade. This other button is to edit once you open it, okay. Use your balance to keep position open. Make sure it is empty, it is blank, okay. So if you click the by percentage, you can set your stop loss by percentage or in money or asset price. So I think to get this thing easy for you, just that's why I asked you to be, that's why I deviated your attention from MT4, because on the IQ option broker platform it is clearly expressed. You understand, everything is explicit, you get. So you just maybe put it by loss in money. Maybe you say that by the time I lost, since you invest $7, by the time you lost $7, the trade should close. Then you apply, okay. So now if I put 100% loss and 100% take profit, okay, and I've changed the time frame to 5 minutes. So you can see that the candle is no longer closing just the way you are experiencing it, because I've changed the setup. So the thing is left is because of your settings, okay. So it is all because of your settings. So if you are opening any trade, you decide the amount you want to risk for the amount you want to gain, okay. You decide how much are you going to risk, and then how much are you willing to gain at the end of the day, at the end of the trading period. So once you set it like that, that if you hit a profit of $7, which is 100% of your capital, the trade should close. If I get a loss of $7 also, which is 100% of my capital, the trade should close, okay. But ideally, your this is just for illustrative purpose. Ideally, your stop loss should be lower than your take profit. Your take profit should be higher, or better still, do it 50-50, just the way I did, okay, just the way I did. But it should be 2:3, okay. So if you have $7 investment capital, 2:3, meaning that you are risking 2% of your capital to make times 3 of that investment amount, okay, to make times 3 of the investment amount. So that is that. Now I've changed the settings. So next time you want to open a position, make sure you set your capital. Okay. So the best thing is for you to target more profit with a tighter stop loss. Target more profit with a tighter stop loss. So if you are investing $10, make sure you are targeting times 3, 3:1. You are targeting $20. Okay, that is 2:1, 3:2. If you are targeting 300% of your capital, that will be $30. Including the capital, that will make it 40. So if it is 3:1 or 3:2 or 3:2 or 3:3, depends, which is 50-50. Okay. So if you invest $10, you are targeting 300% of that capital. That is $30. Okay, and you are willing to lose 50% of your capital to gain that, which is $5. Okay, that is how it's supposed to be. Not that you go and set your stop loss at 50% just to gain 30%. That is not how you trade. So I'm going to leave this position open like this. Let's see how it's going to run. So I just hope that I've been able to solve your question. Okay, you can see now you can see the position close automatically. You can see because I set it at $7 because I invested $7. You can see that the position have closed automatically with a leverage of 5,000, which has a trading volume of 35,000. Okay. So I'm willing to risk all the investment amount to gain what I want. So that is how I set it. So since you are, because IQ option now, I've already explained these things more than countless times to you. This is your trading balance, okay, of $100. Okay. This is your investment capital. So once you are trading, you don't have anything to do with your overall capital, which is this. Okay, you only have business with your investment amount. Okay, so if you put anything, if you are trading and then you can risk all the investment capital, but your final balance will still be there. Your final balance will still be there. So you can risk 100% of your investment capital, okay, to make even more than that. Okay, so let me go to a more volatile and more expensive pair like gold. Let's see. Let's look at gold. Okay, this is the 1 hour time frame on gold. Let me see the daily chart, because I've been on this daily chart, been observing it for like 2 months non-stop. Okay, and we are seeing a strong bullish move. Okay, so let me see So let me see what the 4 hours time frame look like. Okay. I'm not sure if gold is going to hit our all-time high of around 4,000, but let's see. Keep our fingers crossed and see what is going to happen in the market. So let's say we are investing $10, okay, and then we have a 1000x trading volume. I mean leverage. So that means 10 times 1000. What we have a trading volume of 10,000. Okay. So this is the 1 hour chart. So I'm going to open a position with the buyers. 10 times 1000, that will give us a trading volume of 10,000, and then take when profit is at plus, let me see, profit in money, let me put profit in percentage. When the percentage profit is 100%, that means if we make extra $10, we are going to the trade will close automatically. Okay, and then use balance to keep position open. You tick it so that you can use this trade balance. The balance is only applicable to your trading capital, which is this $10, not this $74 here. Okay, so stop loss in percentage at minus 50%. Okay, so if we have 50% of stop loss, or let me just use 100%. Okay, let me use 100% of the capital. So if we have a stop loss at 100%, the trade will close automatically. So you can see everything is now set. If I have a profit of 100%, which is 100% of my invested capital of $10, it will close. If I have a stop loss of minus 100%, which is also 100% of the investment amount. Okay, so you can put your investment amount for a pair like gold. If you have a very good entry, maybe you are trading fundamental, you can put your investment amount to be 1000%. So 10 times 1000%, that will put you in like $100. That will give you $100. So if you have 1000% profit, the trade will close. So I'm going to leave this position open like that. So whenever you come on the chart, it's either it will go in your favor or it will not go in your favor. So but now we are already up with 4%, 3%. So you can see it's fluctuating. So that is just it. So I hope I've been able to answer your question. you have any other question you don't understand, you just ask, please.